for listening to the Drinks.com podcast, the business of online alcohol. I'm your host, Brandon Amoroso, and today I'm talking with Brian Rosen, the chairman of Growth Beverage and also the founder of BevStraight and Algoma Capital. I hope I got all three of those correct, but thank you for coming on the show.
You got it. Thanks for having me. This is any chance we have really to speak to suppliers or founders about the industry. I'm happy to participate.
So before we dive into some of the topics we want to cover today, can you give everybody just a quick background on you and all the various ventures you have going on?
100%. So I take a lot of pride in this first sentence. My family, I should say, was the first liquor license ever handed out in Chicago after Prohibition. So we've been in business since 1933. That one liquor license, that one singular license turned into be the largest grossing wine and spirit retailer in America. So if you're on the West Coast, you think Bevmo. You're on the East Coast, you think Total. If you're in Florida, like you are, you think Big Daddy or ABC. We were bigger than them all in the day. We were the first big box store. We were the first store to put wine, cheese, glassware, cigars, reading material all under one roof. That grew to be roughly $100 million enterprise, and I sold that company in early 2000. It went on from there to, because it seems like such a natural progression, I went on from there to PricewaterhouseCoopers, from entrepreneur to corporate wonk, and ended up running the adult beverage division for PwC, covering North America, Canada, and Mexico. After I realized I don't like to wear a tie or a sport coat for that matter, I went back to my entrepreneurship ways and founded a company called BevStrat. And BevStrat became the largest single sales organization for independent brands. We all know, if you're listening to the podcast, you likely know that distributors aren't going to build your brand. So we put full-time salespeople on the ground in various markets around the country to help sell goods. I grew that business and sold that business to MHW in 2019. At the same time I founded BevStrat, I founded a company called InvestBev, which now, after our last raise, is the largest private equity firm solely focused on the adult beverage industry, only booze. We're at about $250 million under management. That's InvestBev, Algoma Capital, which you referenced, Algoma Cap, which is a $100 million debt facility for distillers. BevStrat I bought back at the end of my employment term. We still have that to help our brand sell. And then, of course, Sprout Beverage, which is our incubator and accelerator, which will graduate its 20th brand in November. And the winner gets $100,000 and gets welcomed into our Growth Beverage family. So those four companies make up kind of what I do every day.
And it seems like they're all sort of, not integrated, but, connected in some way. Yeah.
They're connected in every way. I know I speak in a lot of absolutes. The biggest, there's no other. I understand that, but this is all fact checkable. There is no other place for a brand to come into a system and get capital, debt, sales and marketing, acceleration and incubation, M&A activity, and exit ability under one roof. It just does not exist. And so we've created that in what we call the growth beverage ecosystem. And brands are welcome to come in at any stage. You don't have to come in from the beginning. You can be a growth stage brand. You can be a seed brand. You can be a mature brand. We welcome all people. And so it is what we call cradle to grave. You're right.
And are you primarily investing in brands themselves, or are you looking at technology enablement solutions and other categories within the beverage alcohol space, or is it primarily brand building?
No, well, it's brand. Of the 100% of our funds, 30% is in brands and what I would call support services, what you're calling technology. So Reserve Bar, we're an owner of ReserveBar.com. We're an owner of Speakeasy.com. We're an owner of Philo, which is a compliance software. We're all about the support services too. We love to say the things that make the things, right? So it's lower risk, I should say, and higher reward, and kind of less fluctuation than investing in a brand all the time.
Mm-hmm. It's like providing the plumbing for
Yep.
everybody else. It's not exactly as glamorous or as sexy, but it is, a great place to be.
How to make the shoelaces. That's not sexy.
Yeah. Um, well, outside of when it comes to like the brand side of things and what you're investing in there, what are you most excited about this year going into next year? I've been seeing, at least from the some of the other guests we have come on, whether it's different ways of packaging. There's low alc, no alc alternatives. What are some of the trends and things that you're most interested in
Yeah,
heading into
all
next
all
year?
of that, but it's funny when people talk about no and low, or drink replacement or all that kind of jazz. They're talking about the brand in and of themselves, but they're not talking about the real usability of it all. If if the no and low alc category is 100% up year over year, which it
Hmm.
is, that could simply mean that if you sold 50 units last year and you sold 100 units this year, you're 100% up.
Hmm.
But it doesn't speak to the bigger picture, was you're still less than 1% of the overall consumption universe. That's
Right.
just a fact. Now, when you think of no and low, I love the trend, and it is a trend, and it is people that are younger than me, much younger than me, are doing one on, one off, right? So one drink of vodka, one drink of replacement, etc. Um, One drink full alcohol, one drink low proof to extend the night, to extend the sessionability of their activity. I get all that, but the reality is an on-premise account isn't going to have two of everything, one version of alc, one version of non-alc. It's not realistic. And how do you say to your bartender screaming at a club, "Thank you for the Red Bull and vodka. Now I'll have a Red Bull and fake vodka." It just doesn't work, right? From a practical standpoint. So it does work, however, in the on-premise restaurant community, because there are people that want to be part of an activity and don't want to spend the time putting booze in their body, and it does work at the at home ability. Um, so I like those trends. I like rum as a trend. I like gin as a trend. Tequila is saturated. Vodka's dead. Um, I mean, there are things coming here. Mixology was a thing. RTD was a thing. But if you're getting into the RTD market now, you're likely 2 years too late. If you're getting into the seltzer market now, you're 100 years too late. But people are, right? I see it all the time. So um, if the average guy is just discovering the popularity of White Claw, they've missed the boat entirely, and any money spent in that production will likely go to waste.
Yeah, I feel like literally 1,000 different seltzer brands at this point.
Yeah, I was there in Miami this past weekend. One of my buddies launched a vodka seltzer, and smart guy and great brand entrepreneur, and has a lot of successful brands out there. But launching a seltzer now is just putting a cup of water in the ocean. And I don't know how you find shelf. I don't know
Mhm.
how you find cooler space. I just don't know because, for instance, in the vodka category, for every dollar you spend in production, you've got to spend $5 in marketing, and that's just not sustainable. And then when you look at new brands coming to market, it used to be, hey, we'll raise money, we'll come to market, and we're going to burn through cash because we're going to get our cases up, and then we'll get sold to Constellation or Diageo or
Mhm.
whatever. Now, because it's harder and harder to get to fundraise because of the economy and the recession and interest rates and all of those things, these brands have to operate on themselves. They have to operate cash flow and on their own accord, and that's not as easy anymore. So you're going to see a big shakeout in the new brand world. If you haven't seen it already, you're going to see it. The shelf is going to shrink.
Do you think it's going to slow down the new brand, growth and penetration because of the restriction in capital?
It's going to slow down the people that have no money. It's going to slow down the people that once they get past their friends and family round and they go looking for professional money like InvestBev,
Mhm.
you have to have a sustainable business. You can be losing money. I don't, that's part of the game. You can be losing money, but you have to have a path to profitability. You have to have um, a model that doesn't say I'm gonna raise and spend, and hopefully I get bought by another company. You don't have to have that. So you have to have a business, and so I think that will fundamentally change the landscape of the independent brand.
No, that makes sense. When it comes to brands, and you mentioned, on premise, when you're helping, accelerate some of these companies out of Sprout Beverage, are you focusing more on premise? Are you leveraging e-commerce at all in terms of testing into new markets, or are you doing both at the same time?
Yeah,
Where do you see like, the
yeah.
most success?
Well, I mean, look, Speakeasy is a great e-com play. It's they've got warehouses, they've got retailers all over the world, all over the country, I should say, and it's a great inexpensive way to expand your brand without having to necessarily expand your footprint. E-commerce is great. When I was at Sam's, the first company I mentioned, we were the first wine and spirit store to sell wine online, 1996. So think about it back then, it was like dial-up. It was dial-up, in fact. Um, when someone asked us for a catalog, we would have to fax them a catalog. I mean, this is like fax machines aren't even here, and neither are printed catalogs. This is I'm dating myself.
Hmm.
Now it's a better way, and I think there's two kinds of e-commerce plays. To be honest, I think there is the thirsty drizzly play where, hey, I need a bottle of vodka and a six pack of beer right now. There's that, and then there's e-commerce for shipping or holiday gifting or what have you, like wine.com, Reserve Bar, does a lot of gifting, things like that. So I think it's a natural part of the three-tier system. I think it's a natural part of the distribution model, but it's a hard thing to figure out because anyone who ships, uh, you run the risk of these gray rules that affect interstate shipping. The consumer is going to have to really understand that shipping can't be waived like it is on Amazon because this is a physical, hard, heavy product that requires packaging and styrofoam and bubble wrap and all that stuff so it doesn't break. So it's never going to be cost effective. What it is going to be is a chance to get rare and allocated items delivered to your door. And the sooner that that shift is realized, the less price becomes an issue and the more is the issue really becomes is can I get what I want? So it will be great for vintage Bordeaux, Burgundy, high-end tequila, high-end whiskey, rare whiskey, things that you can't get at your retailer where the ship cost of shipping is a non-issue.
Yeah, I think the higher price per unit uh, makes a lot more sense, and then for the brand being able to build a direct relationship with a customer and offer some of that like exclusivity, um,
100%.
especially in
Yeah.
speakeasy. I've seen a couple of really cool, sort of programs around, rarity, and then that
Yeah.
appeals to a certain type
Speakeasy,
of brand
Speakeasy
heavy.
just got the Tesla deal where they're selling the Tesla tequila, or I think it's tequila, the Tesla brand. They
Mm,
sell a lot of other rare whiskeys. That's where it makes a ton of sense. It also makes a ton of sense for if a distillery or a brand wanted to get rid of old goods, old being vintage, not old like expired, but vintage,
yeah,
and rare goods. If you that's a great place to liquidate, again, excuse the pun, all of those things instead of putting them, you don't have enough goods to put on a store shelf, but you have 300 bottles. It's enough goods to put on Speakeasy and let it deplete that way. Makes a lot of sense.
yeah. No, and you're not buying $2 box wine online unless it's maybe through that last mile delivery via
Yeah, my
retail.
dad would say,
But
no one needs a bottle of vodka in 30 minutes. If you need a bottle of vodka in 30 minutes, there's a bigger issue here. It's not a convenience play in the e-commerce world of booze. It really is. It should be a rare and allocated play. And then price is off the table. And when price is off the table, shipping cost is off the table, discounting's off the table because you have what no one else has. The best users of e-commerce in booze are the ones kind of who would embrace that.
and you mentioned the gray areas of beverage alcohol, which it feels like there's a never-ending amount of them. Um, but over the past 3 to 5 years, it seems like there's been a lot of investment in reg tech to try and make it easier for brands to be able to, navigate all the various sort of hoops in each individual state. What are some of the things that you've seen on that side when it comes to technology and being the plumbing, not necessarily being the actual brand builder?
Yeah.
Uh, and how is that helping facilitate growth for your companies?
It used to be, again, having the privilege of living a lot of life, I can look backwards and say it used to be. And it used to be, we would ship 5, 6, 7,000 boxes a day. And it would, you'd roll the dice. You'd say, hey, UPS, FedEx, let them catch one. But they're shipping a million boxes a day during holiday. So my 5,000 aren't gonna matter. And the fine at $500 is far, smaller than the profit of $500,000. So you kept shipping. Retailers kept shipping. Now, um, there's a couple different players out there that are doing things that are interesting. One is the play, and I forget the brand names of these companies, but the concepts I know. One is where you buy or invest in retailers around the country, they become your beachheads. So you invest in retailers. Um, Mike Burkhoff is doing it. I forget the name of the company, but Mike Burkhoff out of Connecticut. And you invest in the retailers that are in compliant states, and then there's reciprocal states surrounding them. So by buying a retailer in Ohio, you can ship to Pennsylvania, Kentucky, Indiana, right? So that's what he's doing. You get 3 states by buying one, and all you have to do is buy a small, independent, tiny store, close the storefront, begin shipping out of it, and you've got yourself compliant. That's one way to do it. Another way to do it is what Speakeasy is doing, which is having warehouses around the country, San Diego, Washington, D.C., by way of example. That's another way to do it. Another way to do it is what Reserve Bar does, which is partner with retailers around the country and just sell from their inventory specifically. But you have a lot of issues there with vintage, out of stock, etc., because not everyone runs on the same system. Ship compliant is a great option as well. The net, it's all going to be a patchwork of setup until it becomes federally legal.
Hmm.
And it's not it's funny because you can do a lot of things that are questionable that are federally legal, but heaven forbid you want to ship Tito's from Ohio to Pennsylvania. That is a rule breaker in some way. So I think once the feds get their act together and realize this is a non-issue issue, it's taxation. It's a taxation issue. It's an issue for the states that are giving up taxes. They don't know who to give the money to, so everyone gets very kind of attached to their brand.
Hmm.
Um, and it will be like this for a bit until someone figures it out. But everyone right now is just patchworking together, and it's working. But it's tough to build a big business on a gray area.
And how do you see the role of distributor evolving, over the next 5 to 10 years?
It's unrelated to shipping. It's more related to electronic ordering, which could be interesting to your listeners. The COVID did a lot of things besides put 4 pounds on my body, 5 pounds, and my wife would say 10 pounds. What it really did was it proved to distributors that they can operate with less salespeople. It proved to distributors that the operator, whether it's on or off premise, will order through their iPad or through their phone or through a desktop site. So what's happening is it used to be that a rep would go in, get orders, recommend items, and leave. That rep had costs: base pay, incentive, comp, bonus, travel, gas, phone, computer, all of those things. That's all gone by the wayside now. Each distributor, the bigs, Breakthrough, Southern, RNDC, Young's Market, have cut their labor force exponentially post-COVID because they've retrained the on and off premise account to order online. In fact, a lot of them won't even take orders. If you call in an order, they won't take it. They steer you to the e-commerce site or to the electronic platform. So that's the biggest thing that's going to happen. And that's going to make my company, BevStrat, much more valuable because we've got bodies that will go in and sell goods. If you're an independent retailer or any retailer for that matter, how are you going to discover a new brand on your iPad? You can't taste it, you can't look at it, you can't touch it. There's no tactile feel to it. It doesn't exist. They steer you. They say, "Oh, new items on page one of the website."
Yeah.
That's baloney. No one's going to buy a brand like that. So new brands are going to have a lot of trouble breaking into the market, existing brands are going to gain share, and it's going to hurt the independent brand, the small supplier. So if I look forward into the kind of the telescope, I see less and less salespeople. I see more reliant on companies like BevStrat, and I see the independent brand continuing to struggle to get shelf because the store owner, for no fault of their own, does not know you exist.
All right. And you need to buy, what you think is actually going to sell through. And
And be paid for in 30 days.
yeah.
If I'm a shopkeeper, we did a seminar for Sprout 2 weeks ago for 20 brands. If I'm a shopkeeper and I'm limited funds, I'm check to check. How do I buy a brand I've never heard of for an audience I do not know exists? No matter how good it is, that bill's due in 30 days. I got payroll every 2 weeks. My daughter needs braces. I can't mess around with filling my shelf with things that might not sell.
So when it comes to these new brands that are entering the market, then what would your advice be to them? Like, what are some strategic ways that they can get that shelf placement? Because obviously new brands are going to start and some will be successful, even if it's going to be fewer than in the past. What are the things that they need to be doing? How can they incentivize or not incentivize? Well, maybe there's a better term for that, but how can they?
There's a more legal term for that.
Yeah,
Yes.
I was going to say that sounds like maybe not the right word to use, but how do they get that shelf space, and how do they? How do you look at them being able to grow in this new environment?
You got to be capitalized. Let's just start with that. This is a cash business. You can't mess around and not be capitalized. End of story. You have to have money. There's no business like this in the world that I've ever seen. You have all this upfront capital, production, legal, accounting, label design, closure, bottle, formulation. You're $200,000 in the hole before you sell your first bottle. And your first production run is half a container as opposed to 5 cases. It just doesn't, it's a hard business. If I'm a new brand owner, if I'm a new supplier, the one thing I always harp on is find one account on and off premise in an area where you live and be there. Make it a lighthouse account, be there, get in the face, let the owners know you are around, you are available for tastings, sampling, demos, all of those things were legal. And show that. When you get pull in that account, then you go to the 2 accounts that are 1 mile away. And you say, hey, X account is selling 5 cases a week. You guys don't have this product. You should give it a try. And then you kind of spread out from that circle there. That's how you start a brand. You don't. I have more guys that call our team, or gals, people that call our team and say, hey, I live in California, but I think Florida is a great market for my brand. I'm going to launch there. Okay, yin yang. How are you going to do that? You live in LA. You want to launch in Miami. You're 3,000 miles away. You're 6 hours in the air. I mean, come on. You have to be where you can support a brand. Mm-hmm. End of story. And so when I look at people that are launching brands, got to have capital. Have capital. For every dollar you think you're going to do in sales, you need a 5x in support. A. B. Have a pull strategy. You have to have a pull strategy. What pulls it off the shelf? 3. C. You have to support the account. D. Launch in the area where you live. All of these kind of things, they seem basic, but they're not. And people repeatedly just don't do those things. And here's a scary stat for you, Brandon. You've got 50,000 brands registered for cola in the USA. 50,000. And there's 500 brands that account for repetitive SKU velocity.
That's not a great number.
No. And the tagline, the hashtag on Sprout Beverages, be the 5%. Mean that 95% of brands fail. Be the 5%. So do the things that will not put you in the graveyard with Zima, beer, or with whipped cream flavored Pinnacle vodka, what have you.
I wish that one stuck around. That one was.
And I'll tell you an anecdotal story really quickly. I was on a plane years ago, and we were about to take off, and the guy next to me in the seat was on his cell phone, and he was talking, and he happened to be in the wine business, just coincidence, nothing planned there. Happened to be in the wine business. He was yelling and screaming at someone. I got off the phone and said, hey, I'm in the liquor business. You're in the wine business. Tell me what you do. Where you headed? He's like, I'm heading to Florida to meet the biggest distributor in Florida, who will remain nameless, and I'm getting them to focus. I need them to focus on my brand for the fourth quarter. Well, that's not an unusual story, Mr. Airplane Neighbor. How big is your brand? And I'm thinking, just launched, 5,000 cases, whatever. He said 800,000 cases annually. And he's flying to Florida to meet, not to be named distributor, to focus on his brand at 800,000 cases. So how then do our clients at Sprout or InvestBev or Algoma Capital or BevStrat and your listeners, Brandon, how do they then get attention when they're doing 5,000, 10,000, 100,000 cases a year? They don't. They've got to be in the market. They've got to be supportive. And so that anecdotal story is a real story, and it's a real sad story, if you ask me.
Mm-hmm. So, piggybacking off of that, what are you looking for when you're investing in a beverage alcohol business then, whether it's on the software side or on the brand side?
Sure. We look for either cash flow or road to profitability. We look for a good and active leadership team. We look for a category that is either yet to burgeon or a new take on a category that exists. We look for a team that understands their numbers. Know your numbers. Don't guess. Know your numbers. And when you come to InvestBev, and if you're looking for capital, how do I give you, our minimum, our check is 1 to 5 million. How do I give you $1 million or $5 million if you can tell me what your adjusted EBITDA is? I need to know that, right? I'm going to invest in you, and I'm investing in you as a leader. And any leader of any business needs to know their revenue, their gross margin, their path to profitability, their net income, their EBITDA, their cash balance, their bank balance, their balance sheet. It's a lot of stuff. But if you own your business, these are things you should know anyway. And so I think if you come to us with those kind of things all dialed in, you got a much better chance of making it through investment committee than you would otherwise.
Got it. So a lot of it is the team and the handle that they have on the, sort of the back end of the business and the actual, financials.
If 95% of brands fail, then what are you really investing in? You're investing in the people. We just put $1 million into 10-1 rum last week. It was very big public news. It's us and Diageo, and Pronghorn, if you know that group. And we invested in leadership. We invested in the category rum. I like rum. I mean, as a category, well, and as a drink, but I like rum. The founder is a smart guy. People smarter than us have invested in it and like the brand. Those are three things and the guy knows his numbers. Those are 3 or 4 things that matter to us. We're going to announce a deal this week that is in a burgeoning category or an existing category with a great founder who is eager, open to feedback, and open to criticism. That deal will be announced this week. Nomatica is an investment of ours. Nomatica Wines, great female-led company, an aggressive, young, I will do anything to make my brand work founder. We invested in her. Cann, you used to live in California, you told me. Cann, Cann, the number 1 cannabis beverage in the country. We invested in the category of cannabis beverage because we know that at some point it's going to be federally legal. Right now you've got 10, 12 states that are legal. It's going to be federally legal. So things like that give us kind of an in. Speakeasy, as we talked about. Reserve Bar, as we talked about. The consumer needs to get their brands some way. And so that's what we look for. Those things we look for in brands, and we're happy to help, right? If you're 80% there with some of the things I mentioned, our team will give you the 20%. We'll help you with your accounting, finance, HR, marketing. We will do all that to the companies we invest in because it's in everyone's best interest.
You're definitely more on the active investment side of things, you would say.
Yes, I'm at your dinner table with you nightly. That's correct. And our whole team, we've got a very robust team in Chicago made up of ex-Bacardi, ex-Molson Coors, ex-Diageo, Beam Brands. I mean, these are, and then from the food side, Conagra Food and Honest Company, and myself, my partners from the BMO Bank. I mean, there's a lot of a lot of people here that cover both the beverage industry and the financial industry together under one roof, and they all become the resource of the brand that we invest in. So instead
Mhm.
of having, paying your accountant $8,000 a month to reconcile your checking account, we do it for free. So there are real big benefits of taking InvestBev money, and you get the expertise and the historical kind of relationships that come with us.
Yeah, it's definitely more of a strategic partnership
For sure.
than just the
For sure.
check.
That was the idea. That was the idea when we built this company going on 10 years. Um, it was we don't want to be on the sidelines. We want to be your partner and share the bed with you, so to speak, and
Mhm.
all the good and bad that comes with that.
So I got two fun questions for you before we wrap up here. First being, what is your favorite alcohol memory?
My memory or forget, which
Memory,
um,
or I mean, well, I'll let you take it however you see best fit.
sure, sure. I've had some great, I'm not, to be honest with you, I'm not like I drink one drink. It's gin and tonic. It was Sapphire, now it's Hendrix or Gray Whale. Very simple. I can drink anything I want. And if you're watching this at home, behind me is a shelf full of dead soldiers. Um, I I've had some really good times, and generally they're overseas. They're those times where you don't go out to have a great night; it just organically happens. And they've been all over from Cuba to Italy to to California to Chicago. Always with a good group of friends, always with a night that just doesn't end early. And so, beverage has been part of those nights and part of my family, part of the thread and fabric of my family. You can't go anywhere in any of our homes, my family, my extended family, where there's not a collection of rare whiskey or vintage wine or aged wine, what have you. So, beverage or alcohol has played a huge part in my entire life, and I'm grateful for it.
That's the common theme that I've heard from everyone is that, it's around the people,
Yeah,
uh, almost
for
more
sure.
so than the alcohol itself.
I met my first wife in a liquor store. I met my second wife in a liquor store. Um, I mean, I don't know if that's maybe I'm picking the wrong women. I don't, I don't know, but I've owned both stores, so maybe maybe it's okay.
Yeah.
But I didn't meet him in the aisles. I met him at the register. But it's been a real important part of my life for sure.
Mhm. And if you could share a bottle with anyone, who would it be and what would you drink?
It would be what would I drink? I would drink some sort of French rosé, which I really enjoy. It'd be outside, it'd be overlooking water. So that'd be the location and the drink.
Hmm.
Um, Barack Obama.
Okay.
Yeah, I think there's a lot of. He's a Chicago guy. He was a customer of Sam's when he was a senator. Um, he, I'm guessing, has some great stories to tell because he's not only a president, a former president, but he's also kind of hip. So,
Yeah.
regardless of what your politics are, he's a hip guy, and so it'd be fun to hear about his late night excursions with Jay Z and Beyonce, and his hanging out with world leaders and doing those kind of things. I think that's really interesting. The stories would be great.
Okay. So rosé on the water with Barack Obama. That's definitely the best. No, I won't say best. Everybody's answer is good, but that's the most interesting one that we've
Well,
gotten so far.
I aim to please.
Well, thank you so much for joining us. I guess before we hop off, is there anything else that you wanted to touch base on or cover?
No, no, I think that I want the listeners to know that Growth Beverage as a whole and all the companies that we have
Mm-hmm.
um, are exist solely for the support of the brand. And whether we invest in you or not, or lend you money or not, or you work with BevStrat or Sprout, you can always find us as a great resource for knowledge. And because this business will rip your heart out and then step on it. So having been on the other side of this kind of business, I've devoted the remainder of my life, my business life, to helping small brands because they've helped me so much in my career.
It's awesome. Can you let everybody know where they can find you online?
Sure. We've got, it's Brian Rosen. The best way is to find me on LinkedIn for sure, Brian Rosen. Our websites are, the one website that leads you to every website is growthbeverage.com. Growthbeverage.com, and that will lead you to InvestBev, Algoma Cap, Sprout Beverage, and BevStrat.
Okay. Awesome.
You
Well,
got
thank you
it.
so much for joining us. As always, everybody listening, this is Brandon Amoroso. You can find me at drinks.com, and we will see you next time.
Thanks for having me.